Okay, guys, thanks for joining us here in the charts. This is the market beast, Napoleon Macro. Let's take a look at our infamous five, is what I'm going to call it. NASDAQ, S&P 500, the SPY, the SDOW, and the Dow Jones. But we're going to briefly kind of comb over that. The most important information in this video will be the weekly RSI on the S&P 500. Definitely stick around for that, guys. I have to show you something that is a little bit intense. So let's make it short, sweet, and get right into it. Welcome back, loyal family. If you're new here, we only explore price action. Welcome in all of our new subscribers. Let's go ahead and dive right into the charts here. Sure. So today's January the 26th, 2022, and the previous close. We'll start with the NASDAQ. It's going to be $14,172.76. Slightly positive close, 0.1% for the day. Okay, take a look really quickly. All right, same levels, guys. Fibonacci retracement levels are still on the chart. We're looking for 14.6. We still have not closed above or broke above that level. Still got an X for that. Let's take it on over to the SPY. Previous close is going to be $433.38. Slightly negative close, 0.2% for the day. Okay, looking like there's some interest coming in the pre-market there, 437, up 0.8% for the day. That's really good. All right. We had the Fibonacci retracement level up. I can just pull it up very briefly here. And it's still just kind of hanging out near the 0.886, the red line, and the blue line. Let me just kind of point it out for you guys who are new. The red line is at 0.886, is at $432. The blue line is at the 0.786, is $438. Okay, so it looks like the market is just kind of, it's hovering near these levels because, again, guys, these are very important Fibonacci retracement levels, and they're just trying to hold on, till dear life to try to prevent what will, I'm not sure if it's going to happen, guys, but let's let the markets decide. Let's take a look at the Dow Jones, see how it is performing. So we'll be looking for, the previous close is $34,168.10, slightly negative 0.3% for the day. Okay. This check mark is here because we did have a check mark. I was looking for the 34.2 level. That was kind of that one critical level for me that I did not want it to crack a hair below, and obviously it has like seriously pierced through this entire critical range. It's still close to it. Let's let the weekly close out. We have less than 48 hours for this weekly candle to close. So far it looks fragile. I'll be honest with you guys. All right. SDOW, last but not least, and again we'll crank it on over to the SP 500. The previous close, $31.08, slightly positive 1.1% for the day. Pre-market, a little bit of selling coming in, $30.52, down 1.8% for the day. Okay. All right, so the SDOW, what we want to see, the bullish case, we want to see it break below and stay below 29.50 so that the markets can get from under this sell pressure and continue the overall trend. I realize, guys, I'm not a perma bull. I realize the markets are extremely high. Well, I can't say it's extremely high because I don't determine that. I realize it appears that the markets are overextended, but let's let the markets decide when it's going to have that vicious retracement that I do think is inevitable. Remember, musical chairs, derriere, seated when the music stops. Keep that in mind. All right, let's close things out here. This is a really, really interesting story that I wanted to show you guys. If you guys are curious just to know like where the levels are in the S&P 500 before we get into this beautiful story, there it is right there. So the 0.786 is still relevant. You see that? It's right above that red line there, the 0.786, $4,342. The blue line is at $4,398, about 54 cents. If you're new and trying to figure out like, dude, why you have these lines, these fibs? Those are the two most, in terms of the way that I understand price action, those are the two most important critical levels in the Fibonacci on the Fibonacci retracements. If ever you're trying to measure a healthy uptrend, those are the two most important levels. Kind of in an extreme case scenario to continue a healthy overall bull market or an uptrend, right? 0.886 and the 0.786 when you measure your fib from the swing low to the swing high. Okay. All right, so let's get into this story here, guys. I really want to show you this. All right, so what we're going to do is we're actually going to look at the weekly RSI, and we're going to take a look at the 50 exponential moving average. Let's go ahead and back it on out here. All right, so what I'm doing is I'm actually comparing what happened back in February 2020, just simply measuring the weekly candles. There's two gestures that happened just before that pretty intense move to the downside. We actually got two weekly candles to close below the 50 exponential moving average. That was the warning sign that that I was able to notice just before the move down. Now, interestingly enough, the RSI, if you take a look at the RSI and just kind of correspond it with the price action, please kindly focus your attention on the lower portion of the screen as I'm going to put the path on the RSI. When the market goes up, down, find support at the 45.65 RSI weekly level, up, down, found support once again, okay? And then, of course, it got into the overbought territories. Now, here's where it gets super interesting, and I'm actually going to play it back for you. Now, the 45.65 RSI weekly level, let's go ahead and get a playback here. This is the part that I want to drive home, and please kindly, kind of focus with me here, all right? So the two things that would truly determine, in terms of the way that I've done the measurements, to determine whether or not we're going to get a pretty substantial move down. The first thing you want is a weekly close below the 50 exponential moving average. Again, weekly time frame. That's the first thing for the check mark. The second thing is you want to let me actually move this so you guys can see it. You want to get a weekly RSI close below the 45.65. When that happens, okay, if that happens, the next thing you're going to look for is a bullish counter move. It's also called a kiss of death. I got that from Alessio Rustani. That's not a recommendation to go subscribe to someone and listen and start to buy what they recommend. It's just letting everyone know and paying my respect for the ones that I have learned from. Link is in the description from every YouTube channel that I have learned from. And of course, Alessio Rustani is the one that I got this from, the information I'm about to share with you. Let's play it back. Notice how this weekly candle, you see how it pushed up and it actually found resistance at that 50 exponential moving average. I'm assuming that he called it a kiss of death, whether it's a 50 exponential or not, but I guess in this case it's just a simple, let's just call it a moving average. When you close below a specific moving average and then it pushes up to find resistance, we go over this a lot, right? Support, resistance. You can also use moving averages as support and resistance, but particularly he calls it the kiss of death. When it pushes higher and then it gets rejected. You see that? It's rejected. But the most important thing to understand is once you get a weekly RSI to close below 45.65, that's when it becomes real. Okay? So, and then let me just kind of let's scoot on over to present day. So hopefully I did a good explanation in showing you guys the two things: the close below the 50 exponential moving average on the weekly, and then a simultaneous close on the RSI below the 45.65 on the weekly. Let's take it on over to present day to see if we can just kind of gauge what to look for just in case. Here we are. This is present day, guys. This is the present price action right here. Current day. We're on this active weekly candle. Has less than 1 day, 7 hours to close. Okay. First two things. We need a close below. And again, this is just for the bearish case. I'm not saying this is what I want to see, but to interpret the next move in the market, here's the two things. Close weekly candle below the 50 exponential moving average. The 50 exponential moving average as of current day is going to be at $4,300 precisely, $4,327.91. That changes with time, but so far that's where it is. That's the first thing you need. Again, 1 day, 7 hours to close on this active weekly candle. If we close below $4,327.91, that is the first check mark. Unfortunately, we already have the second check mark. The RSI has closed below, well, it has started below the 45.65 weekly level. So that's check mark for number one. We do have a check mark for number one for the RSI, but so far we do not have a check mark for number two, whichever order, right? But we need the both to simultaneously happen in order for this market to continue lower. Let's see if the price action is going to close above $4,327.91. If that can happen, seriously, guys, the buyers have to make a vicious, bullish counter move to seriously get away from this 50 exponential, guys, because again, the RSI is already hovering below the 45.65 level. So to turn things around, there must be some aggressive, bullish momentum in less than 2 weeks. I'm just going to put a date, 2 weeks, okay? And the reason that I say 2 weeks, I think, and a lot of you know, because of the measurement of the move down. Okay, this is only 3 weeks down, right? That's 3 weeks down. So if we can close above that green line, got to get it in 2 weeks. That would show relentless buying pressure. Okay, because it took 3 weeks to move down, with the exception of this week that's hanging out at the 50 exponential. If we can close above that 50 exponential, 2 weeks, I mean a tear to the upside. That's aggressive buying, but it doesn't necessarily have to play out like that. It can also be like the slow gradual move, but it has to keep going and make a new high, right? Kind of that slow gradual move up, kind of the grind, right? If that happens, that's fine, but it cannot stop. This is the final week that this market, or at least the S&P, right, for me to gauge what can happen in the overall markets, the market must continue higher. There can't be any more retracement, guys. Otherwise, we're not going to prevent this intense move down. The intense move down is upon us if the markets do not hold the relative levels where we are as of present day. That's all I have for you guys. Hopefully this wasn't like a super long video. I just really wanted to drive this home and make sure that everyone understands the two things that we're looking for. We already have number one on the weekly. RSI, 45.65, close, it's below it. We got to hold this line, guys. 50 exponential on the weekly. Okay? That's all I have for you, wonderful folks. Thank you for sticking around to the end. That's the end of the video, so hopefully you enjoyed that. If you don't mind supporting the channel before you go by leaving an appropriate thumb, I would truly appreciate it below the video if you enjoyed the content. And leave a comment so that the YouTube algorithm can promote the video on the channel. Thank you for your support. If you guys are new, we also explored the alternative markets, Bitcoin and altcoins. You can kindly subscribe with us, hit the bell, and we'll send that out to you momentarily. Welcome in. I'd like to take this opportunity to thank you all for your time. Remember to always have a strategy before you enter. Keep that positive energy flowing. We'll talk soon, and bye for now.